Palantir shares are running out. Huge funds and investment firms are now owning everything, and there's almost nothing left for us. Who are these huge companies buying Palantir? And what will happen to potential retail traders? This could be our last chance to buy Palantir, but what am I even talking about? Well, let's get right into it. Disclaimer. Palantir shares are being snapped up lately. Several funds and huge institutions have been buying Palantir shares, and they're doing this right under our noses. But just recently, one of the biggest names in investing made a move, and it sent a shockwave across the tech industry. So who is this whale that bought Palantir shares? Vanguard's Total World Stock Index Fund ETF shares have raised their stake in Palantir by almost 7%. This adds over 75,000 more shares, bringing their total to more than 1.2 million shares. It's a clear signal of growing confidence in the company. As you may already know, the Vanguard Group is one of the biggest names in the investment world, and whenever they make a move like this, everyone listens. As a matter of fact, several funds also followed their steps. iShares Morningstar, Large Cap Growth ETF, a $2.4 billion fund, increased their Palantir holdings by almost 24%. The total amount of their Palantir shares are now sitting at over 200,000. And even the mid-cap ETF of the same company also boosted their Palantir investment. They bought more Palantir, which made their total ownership to over 170,000 shares. When funds this big start adding more Palantir shares, it's hard to ignore. Something big might be on the horizon for the company. For Palantir shareholders, this should be a key moment to watch. It's also a signal for anyone following tech stocks that Palantir may be getting set for something significant. The increased interest from major funds suggests there's confidence in Palantir's future. There are several implications of this move by these funds, especially since the Vanguard Group is now involved. So what could now happen to Palantir shares? When huge funds buy large amounts of Palantir shares, it's not always great news for everyone. You heard that right. There can be downsides to this. As mentioned earlier, one of the biggest downsides is that it leaves fewer shares available for everyday retail traders. As big institutions scoop up shares, the supply of shares on the open market shrinks. This makes it harder for regular investors to buy at a good price. When the demand is high, but the supply is low, the price of shares can shoot up quickly. This might push Palantir's stock price higher than some retail investors are comfortable paying. But this is just the start. Another major downside to this move by the whales is the influence these big funds can have on the stock price. When a large institution sells a huge chunk of shares, it can cause a sharp drop in the price. Even if nothing is wrong with the company itself, this can hurt smaller investors who may not have the tools or knowledge to react quickly. The decisions of these big funds can also lead to stock price volatility. This makes it a roller coaster ride for everyday traders. If this happens, it can get really stressful for the rest of us. And here's what you need to remember. Large institutional investors usually have long-term goals in mind. While that can be a good thing, it also means that if they decide to sell their shares down the line, the price of Palantir's stock could drop fast. This might catch small investors off guard, especially if they're not following the market closely. So, is it all bad that Vanguard and the rest of the funds bought more Palantir shares? Well, not entirely. There are also benefits to this. One of the main advantages is that it shows confidence in the company. These funds do a lot of research before making large investments. When they decide to buy, it can be a signal to the rest of the market that Palantir is a strong and promising company. This can boost investor confidence and bring even more attention to the stock. But here's what's even more exciting. These funds can bring stability to Palantir's stock. While large purchases can sometimes create volatility, big funds tend to hold their shares for long periods. This can provide a solid foundation of support for the stock price. Retail investors often follow the lead of big institutions, since they believe that these funds have access to more detailed information and better analysis. Also, when large funds invest in Palantir, it also means they see potential for growth. This could be a signal that Palantir is about to make major moves. This could be through new products, partnerships, or entering new markets. This kind of confidence can attract more investors, leading to further gains in the stock price. To add more to this, having big institutional investors can make Palantir more attractive to other major players in the financial world. More analysts will start paying attention to the stock, and the company may get more media coverage. This increased visibility can help push the stock higher, benefiting both institutional and retail investors. In the end, while there are challenges with big funds buying up Palantir shares, the benefits can't be ignored. And the more that these benefits are highlighted, the more likely Palantir's shares will be difficult to acquire, especially since a huge name in the investment world said something shocking about Palantir. Hear this out because this is crazy. Michael Lee recently said that buying Palantir now is like buying Nvidia 18 months ago. That's a huge statement, especially considering what Nvidia has achieved. Over the last 18 months, Nvidia's market cap grew by around $2.5 trillion. That's such a crazy amount of growth in a short period of time. Now, imagine if Palantir follows a similar path. The company could grow to the same level as Nvidia. This would mean a massive increase in Palantir's value, pushing it into the ranks of the biggest tech giants in the world. For a company like Palantir, which is already making waves in data and AI, such a leap would be extraordinary, and you can already imagine what could happen to their stock price. To put this into perspective, adding trillions of dollars in market value is not something you see every day. It's a rare event, and only a few companies have ever managed to do it. If Palantir grows like Nvidia did, the stock could multiply many times over. The thought of Palantir reaching a similar scale is mind-blowing, given where the company is today. This kind of growth would be groundbreaking and could change the entire tech landscape. If Michael Lee's prediction comes true, Palantir could soon be in the same league as the biggest tech giants. And he's got the data to back this claim up. In fact, Michael Lee is extremely bullish on Palantir, calling it one of the best stocks he has ever come across. And this could further make their stocks even more difficult to purchase. In his words, "In 25 years, this is the best stock I have ever seen. There is nothing like this company I have ever seen in my history in the market." His confidence in Palantir is clear, and he believes the company has unmatched potential in the years ahead. So, how are they going to grow exponentially? One of the key areas where Lee sees massive growth for Palantir is the enterprise resource planning market. The global ERP market is currently valued at around $70 billion per year, and Lee believes Palantir has the capability to dominate the entire sector. He explains that Palantir's product is not only superior, but also far more efficient than existing solutions. Palantir's unique ability to handle large-scale data, integrate complex systems, and deliver actionable insights gives it a strong advantage in the ERP space. If Palantir does manage to capture a significant portion of the ERP market, it would be a game changer. The company's revenue would likely skyrocket, and its position in the tech world would be firmly established as one of the leaders in enterprise solutions. Lee's belief in Palantir's future is based on the company's innovative approach to software, which he sees as being ahead of its competitors by a wide margin. For investors and tech enthusiasts, Lee's bullish outlook on Palantir is a strong signal. If his predictions hold true, Palantir could soon become a major force in both the tech and business worlds. In short, Michael Lee's enthusiasm for Palantir is hard to ignore. His claim that it could dominate the $70 billion ERP market, combined with his praise for the company's overall potential, paints a picture of a company ready for explosive growth. Palantir's ability to streamline complex processes and deliver superior solutions may soon make it one of the most valuable players in the market. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.